Okay, well, welcome back. Happy Tuesday. For those of you who didn't catch the earlier 10-minute, maybe 15-minute silent training I did for you, or if you can't read lips, I'm back. So today is a lesson for me in resilience. So apparently earlier I recorded an entire live training for you guys, but I had my microphone off on my computer. I didn't even know how to do that. So anyway, I'm back. I'm excited to be with you guys. And now hopefully you can hear me this time. So this is just to do a quick little value add, quick training for you guys. So many of you at this point are getting to know all of us, right? Jen Conkey, who is our Chief Experience Officer and also the CEO of our company, has asked me to come in a couple times a week and just do some like quick trainings for you guys, just quick live trainings on topics that are, relevant to, what you're dealing with and, all that good stuff. So today we're going to be doing it on apartment deals, and that's what we're going to talk about. So first things first is really the way that you're going to be getting the majority of your apartment deals as you grow your business. Now, this is if you're just getting started, is going to be through the broker relationships that you make and establish with different real estate brokers in the area, commercial brokers in the area that you're looking to invest, right? So when you're in the world of apartment buildings, what you're going to find is that there's usually a handful of brokers in any given market that kind of dominate the area. They get all of the like off-market listings. I'm going to plug this in because I have 4 kids out there and I can tell that they're not going to be quiet. So let's do this real quick. I don't love this look, but does it really matter the look or does it matter the content? I know. It's the content. All right, there we go. Anyway, so there's usually a handful of brokers in any given market that really are the ones that are the go-to people. And those are the ones you want to establish relationships with. But here's the thing, when you're brand new, it's really, really overwhelming and can be very intimidating to be calling and talking to brokers when you don't even know the business yet, right? You're getting to know it. So I wanted to give you a way to get started with starting to look at deals and where to find them and where to even find those brokers that you can start building relationships with as you go forward. And then once you're going to get your feet wet and you start learning their vernacular and how to ask the questions and what to say, those kind of things, then you can start talking to the brokers. Now, if you haven't had a chance to do our 5-day kind of kickstart training, that's actually in the unit section and it's available to you anytime and it's free. And it's just a quick little 5-day challenge. Like every day you have an assignment. I teach you, you do an assignment so that you can start moving forward with your apartment investing goals. All right, but for today, what I'm going to do is I'm going to show you, if you haven't seen it yet, there's a website called LoopNet. My hair is very distracting me. There we go. There's a website called LoopNet, and they have both a free and a paid version in LoopNet. And so you can just start with the free version. That's fine. You don't have to pay for it yet. You're just getting to know kind of what's out there. And so let me share my screen and show you around a little bit. So this is what I would say is something that you can do when you're just getting started before you're ready to contact brokers. But while you're going through LoopNet and kind of getting an idea, I want you to start collecting the information that you see about the brokers so that you can call them easily when you get to that point. Okay, so the website is loopnet.com, LOOPNET.com, and this is what it looks like. So when it comes up on the screen, I think it probably is going to default to where you live because this is definitely San Diego. And I can't imagine that they show San Diego everywhere. So maybe they know where I live. Anyway, so we're going to select right here, multifamily. So if you click on that, you'll see there's all sorts of different property types. So LoopNet is a commercial real estate listing site. And there's a lot of different types of commercial real estate, right? Office, industrial, retail, restaurant, shopping center, multifamily, specialty, healthcare. What we're going for, if you're looking for apartments, is multifamily. So you're going to select multifamily, and then you're going to put whatever city. Now, I put Oklahoma City in as a place to start. Now, anytime you ever take any training from me, whether it's a live training here or a more in-depth one, anytime I ever give you a city, it is not a recommendation. It is usually just picked at random to give you an idea. I would always, always, always want you to learn how to analyze a market and select a market based on that. So just know I will pick markets at random. It doesn't mean that they make sense financially or not. It's just to demonstrate, in this case, like the website. Okay, that's a little aside. Okay, so when you do LoopNet, this is what's going to show up initially. All right, so you see a map of the city. And if I suggest that when you're looking at an area, you want to see what else is out here too, because sometimes there may be something that's not necessarily in the city, but it's just on the fringes of the city. So what you can do is click on remove boundary, and it will take off the city lines and then give you a broader area. So in this case, this is originally what was showing. When we took off the city lines, it picked up a couple things down here, one over here. Yep. So I always suggest doing that because you might not be in the city, but you might find a great deal just outside. All right, so something about LoopNet is when I do it initially, I'm just gonna pull everything, but I do want you to know how to filter, because maybe you already know like how much you're looking to get into a deal for, or how many units max, or how many units minimum, or what you like or what you don't like. Okay, so in here you have search type, you have all these different property types and subtypes available. All right, and then you have the location. You have lot size, unit size, cap rate, year built, like all sorts of ways to narrow the field. I'm not looking to narrow the field right now because I just kind of want to see what's out there. And that's usually what you'll do when you're getting started. All right, so I'm going to close this and get back to here. Okay, so the first thing that we have here is a 3-unit apartment building. So if you're on this page and in this group, you're probably focused more on apartment buildings. So we have another Facebook group called Passive Income Real Estate Investing. And that is a group that we focus on cash flow real estate and all the different strategies around that. But I tend to talk more about 2 to 4 units for people who are trying to get started in that arena. And in this group, I talk about more about apartment buildings. So in the world of apartments, we would define an apartment building as something that is 5 or more units. Now, where you choose to step into apartments is going to be individual for each person. It's completely fine if you're nervous about getting started to start with something that's, 5 or 10 units. Like, no big deal. It's a great way to get your foot in the door and kind of understand the business, learn about it, and then you could grow from there. And if you're like the type like I just don't really feel the need to do that. I'm fine going right into 40 units. Totally fine as well. Obviously, you want to make sure you're educated about it. When you make a mistake in multifamily, it can be very costly. So you want to make sure that you're doing it like being educated as you go forward. But there's no definition, there's no requirement that you start at any one size. I've heard some people say, well, I mean, you might as well just go for 100 units because 100 units, 5 units, the same amount of work. Where I don't necessarily disagree with that, I do believe that there is a learning curve. I know. I've been investing for 17 years. There's a learning curve. It's vertical when you're getting into real estate. So if you haven't done investing before, in my opinion, it's better to start on something small, at least for the first project, so that you can learn about the business before you start jumping to bigger projects. That being said, 100 units, 5 units, a lot of the work is the same. But of course, if you're doing a 100-unit building and you make a very rookie error that you could have just got out of the way on your 5-unit or your 10-unit, that's something that could cost hundreds of thousands of dollars. So that's why I always say that. I have no problem with you jumping right into apartments, but if you've never done anything before, walk before you run. And that way you're just going to have a better experience overall, because man, you sure do learn a lot in your first few. Okay, so in this case, 3-unit, I'm not going to bother looking at it. This would really be something I would look at with my other group, but we'll move down. Well, this is interesting. This isn't not what we were looking for, but it does just go to show you that there are a lot of different things that come up on LoopNet. The thing that's kind of funny is we said multifamily, not mobile homes, but somebody must have classified it when they posted it under multifamily, so it's showing up here. That's not really what we're teaching, so let's go a little bit further. Okay, so here we go. Here's one that is, well, this would be a big one, but it's okay. I'm going to show you around the listing and just do some education with you. So 4500 North MacArthur Boulevard, and it's 5.5 million, about 136 units. And let's get in there a little bit and see what we can see. Okay. So the first thing that you're going to do, well, for one, you're going to have an idea of what kind of size you're looking at. In the beginning, go ahead and look at everything. Just get familiar. All right, but the investment highlights is a really good way to quickly identify whether you want to spend any more time looking at a deal. So there's 2 really overarching strategies, and we talked a lot about this on our apartment investing free training we did a couple of weeks ago. I think it was May 14th. If you weren't there for that and you want a copy of that, let us know so we can get you a link. It was over 2 hours. It's a very in-depth training. But this is where I started to talk about this. There's really two main strategies that we're going to be focusing on talking about. One is buying what's called a stabilized asset. And a stabilized asset is a property that is already performing. It's got tenants in place, like high occupancy, management's in place, like everything's just kind of humming along. Really all you're doing is buying cash flow. So you're putting your down payment, you're closing on it, and you're taking over the operations or management. Now, when I say taking over operations, I don't mean you're going to go there and be managing it yourself. One thing Jennifer and I are going to be very clear on teaching you is that you're the CEO and you're the business owner. You're not the property manager. And many of the properties that we've picked up over the years have been from people who decided, I want to save my, 6 to 10% or 3 to 10%, depending on the size of the building, and do it myself. Okay, and we ended up buying the assets from them as a totally burned out landlord. That's not what you're looking to do. You're not trying to go be the landlord, even though that's technically what you are. You're looking to be the CEO of your company. Your company owns real estate. Your company hires teams to run the operations, and you are oversight. You're the one asking questions and analyzing and making deals happen. All right, so whenever I say take over a property, understand what I mean is you're putting your professional management team in place and you are managing them, or you're checking in with them. All right, so two different type of deals. One is the stabilized one where you're just buying into cash flow. The other would be a value add opportunity. So a value add opportunity is where you're going into a property that is underperforming and you're basically doing a turnaround on it. You're getting the occupancy up. You're sometimes doing renovation on the units. You're raising the rents. You're decreasing expenses. So there's a lot of different things that you do in a value play. So I'll talk a little bit more about that. And in the free training that we did a couple of weeks ago, we get into a lot of detail on that. So stabilized asset. So in this case, investment highlights is it's a stabilized asset in a desirable workforce housing neighborhood. Okay, so that means it's not a value add opportunity. It's one where you're basically going to put your down payment and take over the property, right? I mean, you're getting a new loan. All right. So right here has executive summary. It says who's listing it, and then it has a link to the listing where you can get more information. So this is probably where their offering memorandum is. It's probably also, I haven't clicked on it, but I'm guessing if you go there, they're probably going to collect your email address in order to send you the offering memorandum. And then for them, that's also an opportunity to stay in touch with you, to market properties to you in the future. So that's cool. Property facts. So down here, you're going to see, the price per unit, the number of units, what style, what is the building class. And maybe one of these days I can do a quick training just about classes of properties and what we look for. The size of the property, the size of the building, occupancy. So even if they hadn't said stabilized property, I would look at this average occupancy of 90% and I'd go, okay, there's probably not a big value add opportunity when it's already occupied 90%. Now, we would love to be able to operate our properties at 100%, and that's always the goal. And through, systems and being tight on management and marketing, we obviously want to be as close to 100% as possible, but 90% is considered a stabilized occupancy. So I see that that's basically the play there. Then it just talks about the amenities, gives you a map and some other information, property taxes and such. Okay. The other thing that I want you to be aware of, and there's usually some pictures here. The other thing I want you to be aware of is the broker information is typically over here on the right. So this is where you can start collecting that information and writing it down so that when you are ready to start making phone calls and reaching out and building relationships with brokers, you've already collected the data. All right, so let's go back and let's see if we can look at another one. So there's 130 units. Here's something, I don't know how many units it is, but it's 7 multifamily properties for 3.5 million. So it's probably a good number of units. Then you have another one here that's 575,000, 6.11% cap rate. It's 11 units. Then we have another one, interesting. It's the same price. This is 6.11 cap rate. This is 10.72 cap rate. Interesting. So I'm kind of curious what that's about. And this is 20 units. This is 11. So let's go take a look. Actually, let's look at both of them. All right. So just real quick. So we have some pictures up there. The property price is 575. Here we go. Oh, townhouse style apartments, high occupancy. Okay, so high occupancy would indicate that it's a stabilized asset. We're not doing a value play. Same thing here, 91%. All right, let's go back and let's look at the other. That was right below it. Let's look at the 20 unit for 575. Okay, so some investment highlights. Looks like it has some updates. All right, here's what I want you to see, the executive summary. So the West Point apartments are a 20-unit property contained in blah, blah, blah. Building is sturdy with a low maintenance exterior. The property was remodeled in 2017. What? It's only 2020. Like, what's going on? With updates that include new windows, paint, updated interiors, new cabinets, counters, appliances, and flooring. Okay, so it looks like maybe it was a value add, but somebody already did it. But let's keep reading. Let's keep reading. So it talks about the type of roof. It's only 6 years old. And here we go. Occupancy has suffered on the property with previous poor management. Okay, so that looks like maybe there is an opportunity. There's some deferred maintenance and some units that need work. Okay, all of these things say value play or value add opportunity, right? New management is making headway with gains in rents and leasing activity. So this is an opportunity for a new owner to continue that trend. Okay, so this is what you're looking for when it comes to a value add opportunity. Now, if I hadn't read all that yet, this is the thing that would catch my eye. Well, just the very fact that there's a cap rate of almost 11% when there was another building, only 11 units at a 6% cap is the first thing that caught my eye. Like, why is there such a difference? All right, so my guess is that if we dug deeper into this, what we probably see is that they'd say, once you've stabilized the asset, once you've done everything, then it'll be a 10.72. Because my guess is if average occupancy is 30%, it's not currently a 10.7% cap rate, right? It's probably really low. All right, so this would be a value add opportunity. If you don't know a lot about value add opportunities, in the training that we did, the free apartment investing training, I brought on Kimberly. Kimberly is our apartment investing coach. And she works with people to do, well, sometimes stabilized asset, but she does a lot with value add assets. So during the training, towards the end of it, I asked her to come on and go through some of the deals that her students had done, that she had done with them. And it just demonstrates for you like what's possible. So whether you're looking for stabilized or value add is probably going to depend largely on your time and what your goals are. Stop sharing this. Okay, so if you are an investor and you have a job and you're busy, you have some capital, but you don't really have time to like do a whole like value add thing, because it does take time and effort and strategy and working with a lot of different people, then buying a stabilized asset and just buying immediately into cash flow is great. That's a great opportunity. A lot of people do that, right? But if you're the type where you're really trying to build your equity and you don't mind investing your time and effort, because sometimes it could take, a few years to do. If they're smaller building, it might only take, 6 to 12 months, but some of the bigger projects are, upwards of 3 years. So if you're willing to put in the work, you can really create a nice equity position for yourself, and you could either refinance at the end of whatever that time frame is that you're doing the turnaround on, or you could sell the building and 1031 exchange your equity into something else. So it's a great way for people to get started when they're trying to really increase their equity and they don't mind working for it. All right. So, and again, working doesn't mean, and if I do a value add opportunity, I'm not on site and fixing the units myself, right? I'm the CEO. I'm coordinating everything. I'm a highly paid project manager. That's what I am. That's what you are. So anyway, that's a really good way to take a property that really needs some love. It needs some attention. It needs more tenants. It needs to get rid of bad tenants. It needs some updating, good management, good marketing, and you could create a tremendous amount of value. Like we wouldn't even bother doing something if it wasn't at least 6 figures. So it's always going to be at least a 6-figure to mid 6 figures value play. All right. So, and if you didn't see that training, when we're, I don't know, probably about an hour and a half in, Kimberly hops on and walks through some of the deals that her students did. And they were anything from, I think the smallest is 5 units. And I don't remember the largest one, what it was. It was like mid 20s or mid 30s units that she was showing examples of. So anyway, that's a great way to really get started on building something that's substantial as far as equity. So anyway, so LoopNet is a great way for you just to start looking for deals, seeing what's out there, and then collecting broker information and connecting with them later. So anyway, I will probably be back later this week. Like I said, our Chief Experience Officer and our CEO, Jen Conkey, has asked me to come and spend more time with you guys and just give you some nuggets and help you get started and just support you. So let us know how we can best support you. If you want a copy of that apartment investing training, just make a comment in here or send us a message. We'll be happy to send you the link. It's free. And also that 5-day challenge to kind of jumpstart things, that's in the unit section. So go check that out. And anyway, we're glad to be here. We're honored to be a part of your journey, and let us know how we can help and support you, and have an awesome day.